The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. Make the call, 800-306-1990, 800-306-1990. Every day at this time, OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 42% of all mortgage transactions nationwide. They do not tell us APR. They don't tell us points paid, points received. They just tell us the locked rates. 30-year conforming loans, 7.20, up a little bit. I'm down a little bit. Jumbo loans, 30-year, 7.437. That one was up a little bit. The 30-year FHA, 6.959, down a little bit. 30-year USDA loan, 6.868. That was down nicely. And the best loan on the market, that's the VA loan. You know, we love our veterans. We appreciate them. I couldn't do what I do every day. Most of you couldn't either. 30-year VA loan down a little bit, 6.908. And if you want our market, this is all from Friday. If you want our market commentary, we share that every business day morning. Go to rsrmarketminute.com, rsrmarketminute.com. You'll get that sent to you. What's happening in the markets today? The 10-year Treasury is up 9 basis points. We'll talk about that in a minute. S&P 500 down 6.43. Mortgage-backed securities are down 44 basis points. And I'm going to tell you right here, right now, that is painful because when the bond goes down, the rates go up. So we're seeing interest rates up dramatically this morning. A 44 basis point hike is not normal. That is a big jump. Why? Well, we're watching this 10-year is once again testing critical overhead levels. Might have even broken through them since we've been on air. When the 10-year yield moves higher, the corresponding price moves lower. Investors that want to bet on a 10-year price moving lower and yield moving higher go what's called short. So they short or sell the 10-year Treasury. They don't own it. They sell it, they borrow it, and at some point in time, they have to buy it back to cover that short or to repay that borrowed interest. So right now, there's $800 billion in short interest in the 10-year Treasury, up 20% in just the last month alone. That means a lot of investors think that bond is going to go down, rates are going to go up even higher. Remember, these investors don't own the 10-year Treasuries, and since they're short, they have to buy 10-year Treasuries when they want to eventually close out their position. If there is a catalyst and a price moves higher, causing yield to move lower, there could be a rush to close out those positions, meaning that the bond prices will go up and rates will come down. We hope. But I don't know whether that's going to really happen anytime soon because the catalyst, the only thing we're watching right now seriously on the way of bond prices, won't happen until Friday morning, 5 minutes after 7 hour time is when Jerome Powell starts speaking. And you know what, Jerome Powell.
Such an idiot.
Yes. If he starts giving us more of his hawkish talk and that the Fed has more to do, well, we could see rates go even higher at that point. So we're going to be watching that for you. We're also going to watch Tuesday, existing home sales, Wednesday, new home sales, Thursday, durable goods and initial jobless claims. That Jackson Hole Symposium starts on Wednesday. Powell speaks on Friday. That's the Mortgage Minute brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You got the phone. Make that call, 800-306-1990, 800-306-1990.